So hi friends, so welcome to our channel again. So today we will be going to look at when to buy the call option and what is the advantage and disadvantage of the buying and call option, and if our buying call option goes wrong, so how can we do the adjustment for the trade so that we can come out with the lesser loss. Okay, so this is for an educational purpose, so please do your own analysis before trying into an real trade. Okay, so here you can come to an introduction that when to buy the call option. So trader will buy the call option if they expect the underlying stock price will move higher. Okay, so let's say if you're analyzing a stock and you find out that the trade is in a bullish mode, so you can buy an call option so that the up move you can capture that using an upside movement. Okay, so by buying an call option you will be entering into an unlimited profit, and the your loss will be limited to the premium which you have paid to buying that options. Okay, so this is an advantage of buying an call option. Okay, so which will comes with the unlimited profit and the limited loss. Okay, so the buying of the call option buyer will get the rights to buy the stock at the strike price. Okay, let's say the stock is trading at 100 rupees, and if you're buying the call option at 110, you will be getting in rights to buy that stock at 110 rupees. Whatever, even though the price moves to 110 150 rupees, you can buy the stock at 110 itself as you're an call option buyer. Okay, so always make sure that you are not buying too far out the money options, as until or unless you are not expecting the stock to move much more violently on the upsides. Okay, so there should be a good duration to expiry if you plan to buy the call option. Okay, so as if you're planning to buy the call option, so make sure that the duration to the expiry is little bit more, so that your option will not expire worthless. Okay, so as you can know that 90% of the options will expire worthless, so you should consider the premium while buying an option. Okay, so you should not spend more money for an call option while buying. Okay, so if you are paying a more premium, then your break even will be higher, as the stock needs to move higher. Okay, so for example, let's say the stock is trading at rupees 100 today, and you are buying an call option of 110 at rupees 5. Okay, so then your break even will be like at 115. So the stock should move above 115 rupees at the day by the time of the expiry, so that you can get a profit on that. Okay, so you'll be your break even, if you're paying more premium, then your break even will be higher as per the premium you will be paying for that. Okay, so if you are not willing to get loss of entire 5 rupees, you can place an SL for your stop loss for your option buy. So let's say if you are willing to risk only 3 rupees, okay, so you can keep an SL. Whenever the option premium moves to less than 2 rupees, you can close the trade. Okay, so now you can we'll be going to look at the call option buying adjustment. Okay, so if you have bought call option of 110 at rupees 5, assuming that the price will move high, but unfortunately there is some bad news comes and the stock price started moving down. Okay, so at that time your premium will keep on reducing, so you will get profit only if the stock price moves high, and after that if the stock price started moving down, you will start making losses. Okay, so how can we do an adjustment for that, so that we can not end up with the entire 5 rupees premium which you have paid as a loss. Okay, so you can sell an 120 call option to hedge your 110 call option buy if the stock price starts moving down. Okay, so let's say the 110 call option have been moved to 3 rupees. So at that time you can see that 120 call option which will be trading at 1 rupee or 2 rupees. Okay, so by selling that 120 call option, you can hedge your call option 110 call option which you have bought for 5 rupees, so that you cannot lose the entire 5 rupees, because you will be collecting the premium from 120 call option by selling an option. Okay, so if the price reverses from downtrend and even if it moves higher than rupees 120, you will never lose anything, even though you have sold the 120 call option. Okay, so your loss in 120 call option will be compensated from 110 call option profit. Okay, so whenever the price starts moving higher, your 120 call option will start giving you the profit, and 110 call option will start giving you the profit, and your 120 call option will start giving you the loss. Okay, so but initially you have bought the call option which will give you an unlimited profit, but in this strategy you will never get an unlimited profit, as after the 120 the price starts moving above 120, your 120 call option which is sold at 2 rupees will start giving you the losses. So this will be converted into one limited profit and limited loss strategy. Okay, and this strategy is like known as an bull call spread. Okay, so initially we have initiated the option buy in a call side, and after that we have been converted this position into one bull call spread. Okay, so now let's look at the call option adjustment number 2. So you can sell 100 call option if you expect that stock price will continue to move down further, as there is such a bad news in the particular stock, so there is no reversal from the downside. Okay, so you can hedge your position by converting your position into one bear call spread. Okay, so which means that you have bought an 110 call option, and now you will be selling the 100 call option which is lower than your bought call option. Okay, so which means that this position will be converted into an bear call spread. So here you can get a profit if the price didn't reverse and tend to move down further. Okay, but what will happen if the stock price has been reversed from that particular range, and if the stock price is ranging between 100 and 110, then in this particular place you will tend to lose some amount, as there is no break even has been hit. So at this place you might have a loss. Okay, so this is an simple adjustment for your call option buy. Okay, so hope this video has been useful for you guys. So please do subscribe to our channel to learn further about much more strategies which will be coming about. Okay, so please do click on that bell icon so that whenever we uploading a new videos you will get a notification on that. So thanks for watching.